Hello everyone, and welcome back to Dr. Tao's Quant Lab. Today we are launching a brand new series. Instead of focusing on the underlying math and theory, as we did in our previous courses, we are going to apply those tools directly to the market for long-term investment. We are going to look at individual stocks, starting with the Mega 7, and I will walk you through my personal valuation matrix for each one. I will be adding more stocks to this watch list over time. But we are starting with the giants, and I have organized them alphabetically for easy tracking. Before we dive in, please note the disclaimer. This is an independent educational project. The views expressed are my own, and this is strictly for educational purposes, not financial advice. For those of you who want to build these models yourself, please refer back to section 1.7 of our main course. This file will not be provided for downloading, but feel free to screenshot. Let's establish exactly what we are looking at. My analysis tends to be more conservative than Wall Street's. We want to mathematically map out risk, so we only put our money to work when the probability of success is overwhelmingly in our favor for the long haul. To do that, our dashboard is split into three core segments. First, the micro fundamental boundaries. This gives us two rolling 1 year forward targets. Range 1, the blue box, like this. This is the deep value floor. In a bad market or severe sector rotation, this is where the stock will likely catch fundamental support. Then range 2, the red box. This is the expected target. For long-term investors, this is the range we care about most. A quick way to instantly gauge a stock's valuation is to compare the current price to the midpoint of range 2. Second, the micro statistical boundary. This is the statistical range, the purple box right here. And this uses a 1 standard deviation band over the last 90 days. While helpful for short-term context, remember that our primary focus today is long-term wealth building. So the red range 2 is our true north. Finally, you will notice some titles are highlighted in blue. If a stock's title is blue, it means I have updated the data for this specific video. A quick note on the data. You will see a growth rate, or G, in the matrix. My personal growth rate estimates are still a work in progress, and I freely admit they are subjective. I have continuously studying and refining this. For transparency, the higher end of that growth range generally reflects the current Yahoo Finance consensus estimates, like this. Also, the range 1 and range 2 boundaries will not be updated again until the next financial report is released, unless I specifically decide to adjust my growth rate estimates. this number. As we go through these stocks, I want to emphasize a core strategy we will cover deeply in section 1.8, left-hand side buying. As long-term investors, we are looking for opportunities where the current price is close to or below the lower bound or the left side of our red range 2. That this where maximum asymmetric upside exists. All right, let's get into the analysis. Let's start alphabetically with Apple. Looking at the valuation thermometer, Apple is currently trading at $257. Notice where that price sits. It is actually trading below the lower bound of our purple statistical range, $259, showing short-term weakness. But more importantly for us, look at range 2 at $257. Apple is sitting right at the absolute ceiling of our expected target, $259. So the insight is that the risk and reward here is highly asymmetric to the downside. For long-term investment, buying at the very top of range 2 offers little room for fundamental growth. To apply our left-hand side buying strategy, we need to be patient. We want to wait for the price to drop at least below the range 2 midpoint to $12, or ideally approach the lower bound of $165. Next up is Amazon. The current price is $213. Take a look at the figure. Amazon is currently sitting in the lower half of our red range 2. It is below the range 2 midpoint of $245 and steadily making its way towards the lower bound of $187. So the insight is that Amazon is becoming fundamentally attractive. It has crossed below the midpoint and is setting up nicely for our strategy. This is a developing left-hand side buy. It isn't quite at the floor of range 2 yet, but for long-term accumulators, the math is beginning to shift heavily in your favor. Moving on to Google. The current price is $298. Google is trading just below the midpoint of its range 2 expected target, $301. Google is currently trading at the most perfect fair value based on our macro expectation. Well, fair value is fine. It is not the deep discount we look for. For a true left-hand side buying opportunity, we would want to see this price pull back closer to the lower boundary of $226. Now for Meta. The current price is $644. Look closely at where that black dot is. Meta is very close to the lower bound of range 2, $16, though it has not broken below it yet. Meta is presenting a classic left-hand side setup. It is heavily discounted relative to its fundamental midpoint of $795, offering substantial room for upside based on its current earning reality. So, for long-term investors, this is exactly the side of the red box you want to be buying on. It represents a highly favorable, mathematically sound entry zone. Next is Microsoft. The current price is $408. This chart is fantastic for value hunters. Microsoft has actually broken below the lower bound of its red range 2 for $19 and is approaching its deep value floor. So the insight is that Microsoft is flashing a rare strong value signal. When a dominant mega cap tech stock falls below its range 2 floor, the fundamental gravity is overwhelmingly pulling upward. This is a prime left-hand side buying opportunity. The long-term risk-reward ratio here is exceptional strong. Now let's look at NVDA. The current price is $177. NVDA is trading right at the absolute bottom edge of its red range 2 expected target, $176. So similar to Microsoft and Meta, NVIDIA is testing the very bottom of its expected fundamental range. It is perfectly positioned on the left side of our target box. This is an excellent area to consider initiating or editing to a long-term position, as the downside risk is mathematically minimized relative to its earnings power. Finally, we have Tesla. The current price is $396. Tesla's chart is completely disconnected from the rest. The current price is massively higher than both its blue range 1 and its red range 2 targets. Tesla is a unique beast. Fundamentally based on standard GAAP EPS and our conservative growth estimates, it is trading in the stratosphere. We cannot depend on fundamental analysis for this specific stock right now. So, because it defies standard fundamental gravity, we will defer our strategy here. We will focus entirely on the technical and momentum aspects of trading Tesla in a later dedicated section. And that wraps up our first look at Meta 7 through the lens of the valuation matrix. To summarize our findings for long-term investors, based strictly on our left-hand side buying strategy, Meta, Microsoft, and NVIDIA are currently flashing the most mathematically sound buy signals. They offer the best risk to reward ratios on the dashboard today. I will be keeping this dashboard updated, adding new stocks, and refining my growth estimates as new earnings reports come out. Thank you for joining me in the Quant Lab, and I will see you in the next analysis.